Ladies and gentlemen, good day and welcome to the PG Electroplast Ltd Q2 FY25 conference call hosted by JM Financial. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. This presentation contains forward-looking statements based on the currently held beliefs of the management of the company, which are expressed in good faith and in management's opinion are reasonable. The forward-looking statement may involve known and unknown risks, uncertainties, and other factors which may cause the actual results, financial condition, performance, or achievements of the company or industry to differ materially from those in forward-looking statements. These forward-looking statements represent only the company's current intention, beliefs, and expectations, and any forward-looking statement speaks only as of the date on which it was made. The company assumes no obligation to revise or update any forward-looking statements. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Deepak Agarwal. Thank you, and over to you, Mr. Agarwal.
Thank you, Seema. Good afternoon, everyone. On behalf of JM Financial, I welcome you all to PG Electroplast Q2 FY25 earnings conference call. Today, we have with us senior management represented by Mr. Vishal Gupta, Managing Director of Finance, Mr. Pramod Gupta, Chief Financial Officer. So, without taking much of your time, I would like to hand over the floor to the management for their opening remarks, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Deepak. Good evening, everyone. Thank you for sparing your valuable time and joining this call today. Hope all of you are doing well. I am accompanied by Mr. Vikas Gupta, MD Operations, and Mr. Pramod Gupta, our CFO, on this call. We have already shared the presentations of our results earlier in the day and hope you have gone through that. Second quarter of FY25 has been another strong quarter in the growth journey of PG. The company has got a good traction in its product business, and other segments also have ramped up very well. The company has posted robust quarterly profits and sales growth in this quarter. Operating revenues for the company grew by 46% and crossed 670 crore rupees, with the product business contributing a 54% share in the operating revenue. EBITDA also increased by around 55% and stood at 60.5 crore rupees, and net profits rose by 57% to stand at 19.5 crore rupees. In first half of FY25, the company has posted industry-leading growth in the product businesses, and operating revenues for the product businesses were 1,355 crore rupees with 119% growth. The room AC business contributed 1,118 crore rupees, which is a 143% growth on YOY basis. The washing machine business also has grown by 41% on a YOY basis, and air cooler business has also grown by 267% on YOY basis. Order book and visibility for product business remains very robust, and the company is on the track to accelerate product business growth significantly in FY25. Our new product offerings in washing machines and room ACs and air coolers have received very good response. The company is focusing its efforts towards developing products that helps it maintain cost leadership while striving for product leadership too. The company continues to see increased interest in the business from new and existing clients, and we remain very confident about the future growth prospects of our business. For FY25, our revised operating revenue guidance is at least 4,250 crore rupees in PG Electroplast and another 600 crore rupees in our JV company, Goodworth Electronics, implying 4,850 crore rupees of operating revenue as a group, which is a growth of around 77% growth on FY24 numbers. We are also revising our guidance for net profit to at least 250 crore rupees, which is a growth of around 83% over FY24 net profit of 137 crore rupees. The growth in product businesses, that is washing machine, room air conditioners, and air coolers, is expected to be around 78% from 1,668 crore rupees to around 2,975 crore rupees. CapEx guidance stands at around 370 to 380 crore rupees, and the progress on all infra and capacity expansion is going on as planned. The company is on track to meet the capacity expansion guidance for the current year. I would like to reiterate that company remains committed to improving capital efficiency by improving asset turns through product business growth, and we aim to deliver industry-leading growth with best-in-class return ratios in the coming years. With this now, I would like to hand over the call to my colleague, Mr. Pramod Gupta, our CFO, to elaborate on the financials. Thank you.
Hello and good evening, everyone. I'm sure all of you have seen the financials in detail already. We have had a great scale-up during first half of 25 from an operation point of view. In a very challenging supply chain environment, the company has done excellently well. The ASPs in RAC, washing machine, and coolers were down due to lower commodity price during the period, and availability of critical component was also a challenge due to import supply chain becoming more onerous. We have posted industry-leading growth in RAC in revenues of 143% in the first half and 41% in washing machines. The company's operating revenue for first half are up 75% YOY at 1,992 crores. EBITDA grew 80.7% at 195 crores, and net profit was up 126% to rupees 104.4 crores. During the first half, operating margins improved due to cost control, low commodity prices, and operating leverage. On the balance sheet side, the net debt stands at 238 crores at the end of first half due to inventory stocking up for upcoming AC season. As stated by Vishalji, we have guidance of rupees 370 to 80 crores of capex in FY25. And again, I want to reiterate that improving capital efficiency by sweating our existing and new assets will be the key focus area of the company in the coming years. And all our existing expansion plan are on track, and the infrastructure and plant and machinery which is being planned for this year is likely to come on time for the capacity expansion that we have planned this year. We remain very optimistic on the growth opportunities in our areas of focus, and we believe the company is well placed to expand its market presence and market share further in the coming years. With this, I will now like to open the floor for Q&A.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Vipraw Srivastava from Phillip Capital. Please go ahead.
Hi, I'm audible, right?
Yes, sir.
Yeah, just first question on the IT PLI. I mean, what's the progress there? The management was stating that quarter back that they would be sharing some news, but again, any updates? Because recently there have been news articles also that players are struggling to meet their targets. So any thoughts on the IT PLI? Yeah.
So, please understand, regarding the IT hardware PLI scheme, the government is still trying to figure out how to restrict the import of IT hardware products into the country. Once that is aligned and in place, then we should see some kind of traction for moving of manufacturing from overseas locations to India. And we are not able to see much of a movement in the industry right now. There are more than 28 companies under this IT hardware PLI 2.0, and most of those companies have not been able to tie up any business. So we are working with the government to see how to regulate and restrict the import of IT hardware products so that the local manufacturing can gain some momentum.
Right. And so secondly, on the TV business, obviously this year you are bound for a very good, healthy growth. 600 crores is the target. But going ahead, I mean, how do you see the TV business progressing? Do you see competition? Because one of your peers is saying that the TV outsourcing market is almost over. What are your thoughts on that? I mean, do you see a good opportunity in the TV outsourcing market? Any thoughts on that?
So please understand, we are seeing a very strong momentum. Please note that we have a very small base as compared to other competitors, and we are seeing a very strong growth in our numbers for television business. We are confident of maintaining that momentum going forward as well in FY26 as well. And we are already working on certain new platforms in televisions, and we are in process of acquiring more clients. So we are confident about the numbers for TV. Definitely the business is very competitive. So we need to maintain a very tight and lean cost structure for that.
Fair enough. And so finally, last question on the AC business. I mean, obviously, last year was very good with the summers around 20% volume growth was there. So, but this year, what kind of volume growth are you anticipating for the industry in next summer cycle, which is in 2025, and any thoughts on that?
We see strong momentum continuing at least till March, and after that, actually, how the monsoon season pans out and how things happen will actually decide the course of growth. But at least till March, the order book is very, very strong, and based on that order book only, we have been able to revise our guidance upwards. So if you see, we have revised our revenue guidance and bottom line guidance very significantly by almost more than 15%, and that is largely due to very strong overall product business momentum that we see in coming months.
Thank you. Thanks a lot. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Achal Lohade from Nuvama Institutional Equities. Please go ahead.
Yeah, good evening, gentlemen. Thank you for the opportunity. Congratulations for a great show. The first question I had, if you could give while you have given for the first half the growth, if you could spell out for the second quarter specifically, what has been the growth across key categories?
Yeah, I'll just give you those. So in AC, we had a growth of 212% on a YOY basis for the quarter. For the washing machine, the growth stood at 23%, and for the coolers, the growth was 191%.
Understood. Sir, if you could also give us the mix from the molds, plastic molding, and tools.
The plastic molding business was about 229 crore rupees, and the electronics business was about 80 crores.
Understood. So if I look at 229 crore, that's a extremely strong number. So if you could guide us, what has driven this, and how do you see this particular segment for the full year? Because I see that part of the upward revision is also driven by molds, a plastic molding business.
So this quarter we had some, it is not only plastic molding, it is plastic molding and others. So we had some new client addition in some of the other segments, including some sheet metal components, etc. And in the off season, we have a spare capacity which we try to utilize for supplying components to the industry. this business we are seeing a good growth, but please don't extrapolate 44% kind of a growth. It will be more like 20%-ish growth on a full year basis on this business.
Understood. And in terms of the incentives, if you have booked anything in second quarter, and if yes, what is the quantum?
No, there has been no incentive which has been booked in the second quarter. We'll book the incentive as and when we receive it, and we will inform when we actually book the incentives.
Understood. And in terms of the RAC growth, you mentioned 212%. What would be the industry number according to your estimates, sir, for the second quarter?
Typically, the second quarter may be probably close to 35 to 40% for the industry. But for us, last year, second quarter had a very low base because of the early monsoons, and there was a channel inventory which was there in the last season. So, I mean, the absolute numbers are not large. In fact, if you see last full year, like in the full quarter, in the second quarter, we just had 75 crores of sales. This year, we had about 235 to 36 crores of sales in the in this quarter. So basically, the numbers are not very large. In first quarter, we had 882 crores of sales in the AC business.
So ideally, one should look at first half, or in fact, ideally trailing 12 months. Is that right?
Yes. Yeah. Ideally, I mean, trailing 12 months is a better metrics to look at any point in time.
Perfect. Sir, in the same context, if you could give, for us versus the industry, what would that number be?
I mean, I don't have the full numbers of the industry. I'm just putting a best guess that probably the industry has seen a growth of about 40-45%. I'm saying the overall market in the sense the retail sales, etc. Maybe outsourcing industry would have seen a higher growth because last year, as I was telling you, that there was a very low inventory. So this year, some amount might have gone in inventory and channel filling, etc. also.
Right. Understood. And any new client addition across the segments apart from the plastic moldings and, any other segment we have seen client addition?
So we continue to add clients, and we have seen some good client addition, but we don't make announcements on the client addition during the quarter.
Understood. And just last question, if I may, how do we see the margins? I mean, for FY25, you have given the guidance. I appreciate that in terms of that. But if one were to look at, from a margin perspective basis, what growth expectations what we have across categories, do you see margins improving, margins remaining stable, or any impact on the margins?
We think margins,
let's say 2 to 3 year perspective. Yeah.
Margins should be in the similar range as they are today. And as I have been explaining, actually for us, the percentage margin is not the key driver. Typically, it is the per unit margin in absolute amount that we actually get, and that is what we look into when we are doing the business, and that remains the key focus because commodities are a pass-through, and there is always, up and down prices are happening in the sense the movement is happening on the commodity. So on those basis, we think that the margins should remain largely stable for us in absolute amount per unit.
Understood. And any comment you would like to add in the electronics segment in terms of how do you see it, growing?
Yeah. So electronics business also, we are seeing a very strong growth. In fact, this quarter, if you see, our electronics business grew almost 700% on a year-on-year basis, apart from TV. So TV business has actually gone into good work, the 50% JV, and the X of TV business, we are seeing a very strong traction, and some of the revision which we have done on the sales is also on account of a high growth which we are experiencing in our non-TV electronics business. We continue to see and scout for new businesses there, and we are seeing some early success in that side of the business.
Great. And this margin in this segment would be similar to the company level margins or could be higher?
No, the TV, the electronics business margins are typically very low in the range at the EBITDA about 2 to 4% at best.
Got it. That's helpful, sir. I'll fall back in the queue for more questions. Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to the participants to limit their question to 2 per participant. Should you have a follow-up question, we request you to rejoin the question queue. We take the next question from the line of Rafat Syed from InCred Research. Please go ahead.
Yeah, hi, sir. Thanks for taking a question. I'm audible?
Yes, you're very much audible. Please
Yeah,
continue.
sir. Congrats on great set of numbers once again, sir. A couple of questions, sir. Can you just give me the breakup of CapEx of 370, 380 crore which we discussed, and how much we already did, and balance where and how you are going to spend? And also, how you're going to fund this CapEx?
Yeah. So we have, out of the 370, 380 crore CapEx, we are putting up about close to 165 crores in the product business for expanding the capacities, and this will be for the plant and machinery in the product side of the business. About 185 crores will be going into the acquisition of land and making of buildings, which is the infrastructure side, and the rest will be about 20 odd crores, which we are expecting to invest in some basically maintenance capex as well as some small capex on the plastic component side, especially on the sanitary ware. Now, this is the breakup.
Hello, sir. We lost your audio. Pramod, sir, can you hear me? Participants, please stay connected while we reconnect the management.
Read it out.
Hello? Pramod, sir, we lost your audio, sir.
Am I audible?
Yes, sir.
Yeah. So that has already been spent. Rest is we are on track, and as and when we kind of reach the milestones, those payments will be made to the vendors and the suppliers which are supplying this capex or doing making the infrastructure.
Got it, sir. And sir, my next question on JV with China for laptop. So how is that progress over there, and what kind of growth you are looking for next couple of years, and where you reach in that segment?
So please understand, as I told to the earlier caller also, regarding IT hardware on the laptop manufacturing, as of now, we are not seeing any kind of movement happening among all the players of IT hardware. And that is mainly because the government is still not able to figure out the way to how to restrict the import of IT hardware into India. Once that mechanism is in place, then we can see some kind of traction and momentum towards shifting of manufacturing from overseas countries to India. So till now, we are not seeing much of that. But in the meantime, we are preparing our infrastructure, and we are trying to see how we can leverage that opportunity as and when it comes.
Got it, sir. And sir, as you discussed that looking for PAT of 250 crore rupees, so what is the PLI including in that?
That will be just 30 crores.
30 crore only, yeah? Okay, fine. Got it, sir. Thanks. That's it from my side.
Thank you.
Thank you. The next question is from the line of Yash from Stallion Asset. Please go ahead, sir.
Hi, thank you for the opportunity. My first question was on the fundraise that you've announced. I think it's about up to 1,500 crores, in the board meeting. So it's a significant amount, and I just want to understand how will this money be deployed?
So this is the total upward limit of about 1,500 crores. That the basically that's the amount that we have taken the upper limit as. From the board and even from the shareholders, we are seeking the permission for that QIP. We are seeing some very significant growth opportunities coming our way, and if as and when they kind of materialize, we will be utilizing that money for capex and working capital. In fact, this year itself, the growth has been much higher than what we initially anticipated. And in fact, a significant amount of last year's QIP amount that we raised has actually gone into the or is actually getting deployed in the in the working capital side there. So now when these new growth opportunities which we are focusing on, they materialize, we will require money for both CapEx as well as the working capital. And so for that, we have taken the permission, and we are hopeful that if some of them are going to materialize in coming months, then we will be able to raise the QIP and utilize that money for those opportunities.
Okay, so will you be planning any inorganic acquisition in that amount?
No. We are actually looking at largely only organic growth opportunities. We are not looking at any inorganic initiative.
Okay, got it. Thank you.
Thank you. We take the next question from the line of Ashish Kumar Singh from Vyom Wealth Advisors. Please go ahead.
Hello, sir. Am I audible?
Yes, very much.
Sir, congratulations on the good set of numbers. Sir, my question is on this fundraise itself. So you talked about having those funds beforehand and getting into the new growth opportunities. So can you tell us about the industries that you're looking in the product line? Any guidance on the product line which you are looking in the future?
The product lines will be similar to what we are doing. They will actually be some of the expansion will be maybe some backward integration in some of the categories where we are working. We are also evaluating one or two new categories in the consumer durable side of the industry only.
Okay. And sir, as earlier you also mentioned that the government is not ready as of yet for the IT hardware part. But do you expect the government to be ready with something in the future? And do you have any plans to expand into that if there is some opportunity there?
So please understand, we are also closely following up with the government, and we are hoping that there will be some kind of policy guidelines. And we are putting up an infra in place to see if, as and when the opportunity is there, we are able to harness that.
Okay, sir, that was all. Thank you for answering all the questions.
Thank you, sir. Before we take the next question, a reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Nilesh Patil from ICICI Securities. Please go ahead, sir.
Yeah, hi. Thanks for the opportunity. Hope I'm audible.
Yeah, very much. Please go ahead.
Yeah, hi, sir. Congrats on great set of numbers. Sir, my question is on the possibilities of entering into other segments, as you mentioned in the previous question that you may consider entering into some other consumer durable segments. So, any specific kind of guidance over that? What kind of opportunities we may look for?
We are in the evaluation phase still. As and when we decide to go ahead, we will make an announcement.
Sure. Okay. And so hope I expect these segments to kind of have similar return ratios and asset turns to the existing business.
Yes, we have a very strong guardrails in our company. We don't actually take up any new projects unless those projects meet our internal ROC targets. So be rest assured that any new capital allocation will be done only if we see opportunity to make significant ROC, which is significantly higher than cost of capital, and basically we will maintain those capital efficiency norms that we have put in our company.
Thank you. So my second question is that you have guided on the revenue visibility and profitability. And you have indicated that you will be sweating the assets. So any guidance on you can share any band on asset turns that you are looking for?
So I'm sure you'll appreciate that by the end of the year, a lot of the capex that we are doing right now is going to get capitalized, and we are going to see an increase in the overall net and gross fixed asset base. And therefore, we think that given the guidance that we have given and the kind of capitalization we are going to see, overall, a similar number as it is today, which is about 4.5 to 5x on the net fixed asset side, that should be the range which we should be able to maintain for the net fixed asset turn in our company.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Komal Iyer from NBG Investments. Please go ahead.
Good evening, sir. Could you help me understand what is the reason for the drop in the revenue on a quarter-on-quarter basis?
Ma'am, this is actually a seasonal business. The AC revenues are typically high in first and the fourth quarter of a year, and second and the third quarter are typically low season for us for manufacturing of AC. And AC is almost right now about 48-50% of our revenues on a yearly basis. So therefore, because of that seasonality, we see a drop every year in the second and the third quarter vis-a-vis the first and the fourth quarter.
So we are so optimistic about business despite a 50% drop in the Q on Q. You have still revised your guidance upwards.
So, ma'am, the seasonality plays out every year. It doesn't matter quarter on quarter how you see. I mean, we look at the business on a year-on-year basis only. So every year in quarter two and quarter three, the utilization of the plant and the production drops. We don't have anything, any control over that. Obviously ACs are not selling in that season, so nothing can be done.
Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Vipraw Srivastava from Phillip Capital. Please go ahead.
Hi, I'm audible, right?
Yeah, very much. Please go ahead.
Thanks for allowing me a follow-up question, sir. Obviously, you are into PCB assembly also, but the government of India is now coming up with a PLI on components, which will be a backward integration for EMS players. So, any thoughts on that? Any sort of backward integration you'd be doing? Let's say your peer Amber is doing bare boards also. Something on those lines. Is there a thought process about that, or it's still a long way?
Please understand, we are also keenly waiting for the announcement of the electronic components PLI scheme. Once we have that, we will try to go through that, and we will be looking at what are the opportunities that we can look at. Definitely, we have certain set of guidelines or guardrails for our investments. We'll try to see if we can fit into some kind of investments in those guardrails. We'll definitely like to pursue that.
Okay. Thank you. And so secondly, this year you are having 30 crore PLI as your in your financials. In FY26, roughly, if you can give an idea, what would be your PLI number, if you have an idea?
That will be about 37.5 crores.
FY26, right?
Yes. This year,
okay, thank
FY25, it is 30 crores, and next year it will be 37.
Okay. Thank you.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and one on your touchtone telephone. We take the next question from the line of Jalaj from Swan Investments. Please go ahead.
Yeah. Am I audible?
Yes. You are. Please go ahead.
First of all, congrats on a great set of numbers. So I had one question with regards to the margins for the balance of the year, that is the H2. So if I do a back calculation onto the residual part from the already achieved margins in the currently in the part, so I come up with for the balance H2 it should be around 6.5%. So could you just give a directionally what sort of margin accretion would we be seeing coming from, or from which place? Is it coming from PV, JV, or someplace else?
No. This business, that the numbers are on the bottom line and the guidance that we have given for the numbers is that 4250 is X of TV, and this 250 crores is also X of TV. So this 250 crore, out of that, like in the first half, we have done roughly 105 crores, you can assume. In the second half, we are talking of doing 145 crores of profit. Out of that, about 24 or 24 crores at the bottom line will be coming from the PLI X of tax. So roughly, you can say we are talking of 120 crores of net profit on a top line of 2260 roughly. So that way, the margins that I'm talking about are very similar to the first half margins on a company basis.
Understood. Understood. That makes sense. Thanks for that. And with regards to QIP, I understand you did allude to some view of incrementally growth coming from consumer goods or consumer vertical. But directionally, are we seeing specifically on the IT hardware also, are we looking opportunities via this QIP, or there is something else also?
Right now, nothing.
Yeah.
No, there's nothing in the IT hardware, very specific to IT hardware that we are planning from this QIP. This QIP is going to be largely utilized for the growth opportunities in PG Electroplast. The IT hardware is actually a part of 50% joint venture company, which is called Goodworth Electronics. So if there will be opportunities on that side, we will be infusing capital to take care of that. But right now, this QIP, we are budgeting largely the opportunities that we are looking for growth in PG Electroplast Ltd only.
Got it. And one last question, if I may. This is more from an industry perspective. How is the competitive landscape specifically in the RAC or your washing machine changing, or there is a lot of competition? Because all across verticals in the contract manufacturers, we are seeing good traction for all the players. So could you talk a little about the competitive intensity there?
Competitive intensity?
Specifically, yeah.
Competitive intensity has always been high, and we continue to see high competitive intensity. In fact, some new players are entering in the washing machine business. In AC business, competitive intensity is high, but because of the problems of the supply chain this year, the situation is getting a little bit more complicated because in the second half especially, and next year first half, we think that supply chain management could be playing a very important role in the AC business growth outlook for different players. And that side, we think, is going to determine the growth rates of different companies and how they tackle the supply chain challenges.
Understood. Understood. Thanks a lot and best of luck.
Thank you. Thank you very much.
Thank you. The next question is from the line of Basant Bansal, an individual investor. Please go ahead, sir.
Yeah, thank you for giving this opportunity. While answering one of the earlier participant question, you said that second and third quarter is generally lower than the first quarter. And in the first half, we have achieved around 2,000 crore and full year guidance is 4,250 crore. That means we will have to generate revenue of around 22 to 2,300 crore. And given the fact that third quarter is low, so the majority of the sales or revenue will come in the fourth quarter. Is my understanding correct?
Yes, it has been the trend in the company's numbers, even if you see in the historical numbers. Last year, for example, we did 1,068 crores in the fourth quarter. Full year number was 2,750 odd crores. Similarly, year before that, the fourth quarter had 828 crores of turnover, while the full year numbers were 2,100 crores. So typically, fourth quarter is typically a very large quarter for us every year.
Okay. Yeah, thank you. That's all I wanted to ask.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, if you wish to join the question queue, you may press star and 1. Participants, if you wish to join the question queue, you may press star and 1 on your touchtone telephone. The next question is from the line of Jeevan Garg, an individual investor. Please go ahead, sir.
Yeah. Am I audible?
Yes.
Hello, sir. Yeah. Thank you. Sir, in AC, normally compressor and other equipments were getting imported. Now we are manufacturing it here, or how it is working?
So no, compressor are typically import only, and almost all large companies in India, all companies in India today are actually dependent on import of compressor. I think there are some companies which are going to put up the compressor lines this year, but most of the companies, almost all, almost 90% plus of the capacity is still today dependent on imports only.
So are we any in the plans that to manufacture compressors in future, maybe 1 to 2 years down the line?
So we keep on evaluating the opportunities. As of now, we do not have any kind of announcement to make on that. But as and when we have something, we'll come and disclose it.
Okay. Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Parth Shah from Tara Capital Partners. Please go ahead.
Hi. Thank you for the opportunity. I just needed one clarification. The revised guidance for revenue and profitability, is it after considering the PLI or is it before considering the PLI?
No, after considering the PLI. As I said in one of the earlier questions that we are expecting about 30 crores of PLI, that is before tax, and like typically we have 20-21% kind of a tax rate. So post-tax impact of that will be about 23-24 crores. So that 250 crores include that 23 to 24 crores of PLI in that.
Okay. Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Bhagyavanath Reddy, an individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yes, please go ahead.
Yeah, hi, sir. Sir, at the start of your result document, you have published a standalone number. Is this related entirely to our product business, or how should we look at it?
No. In the standalone company, right now, the businesses that are housed are actually some part of the plastic components, full washing machine business, and the electronics business, full electronics business, X of TV, and also the mold making business, where we make the tooling and molding for molds for ourselves as well as for others. So those businesses are a part of the standalone business. The 100% subsidiary PG Technoplast has a full AC business. It has a cooler business and some part of the component plastic and sheet metal component business, as well as some controller business which we have started providing. Some of the electronics business also is in PG Technoplast. So that is the way that today the division is there among the two companies.
Okay. Thank you for the detailed explanation. And the other one was on our debt. I think we have about 240 crores of debt. How are we, or by when are we planning to repay this?
We don't actually have a plan to repay debt as of today, and we think given the strong growth phase that company is, some part of debt, if some part of that growth journey is kind of financed by debt, it's not a problem for us, and we think if it is in control, that debt to the EBITDA and debt to equity ratios are within the limit, internal limits that we have set for ourselves, then we don't think there is any issue or any problem or any hurry to actually repay the debt or become debt free.
Okay, sure. Makes sense, sir. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Pratap Maliwal from Mount Intra Finance. Please go ahead.
Am I audible?
Yes, very much.
Yeah. Hi. Thank you for taking my question. So I just wanted some more clarity on that point you raised, that the import supply chain is getting maybe an area of concern. So which areas are affected for us in terms of supply chain, and does this pose any risk to the guidance that we've given going forward in terms of the supply chain management is going to become a key monitorable going ahead?
As of now, first of all, I want to highlight that for us till March, there is no challenge. We have actually secured all our uh, supplies for almost all critical components, and we are very sure of achieving these targets. In fact, uh, one of the reasons why, because of which some inventory increase has happened this year, is because we have been extra careful and we have been planning for the supply chain issues, and therefore we are confident that we will be fine with the guidance which we have given. That's point number one. Point number two is this, that government of India of late has been actually putting quality control orders, basically making the BIS certification mandatory for component factories also, which supply the components to India. And some of the key component factories have been actually getting their BIS certification getting over, and they are not getting renewed easily. And that is leading to some supply chain challenges this year, and is likely to actually aggravate further next year. And that is why I am saying that supply chain issues are becoming challenging in the sector.
Okay, understood, sir. Thank you for the detailed clarification. And just one more question. Now, you also said that the ASPs are coming down for products. So I'm just trying to understand our revenue model. How does it affect our top line and margins when the average selling prices for commodities, for the products comes down as commodities are a pass-through? So how does the revenue model work here?
So typically, the bill of material is a pass-through. We get conversion cost, or basically the contract, basically the making charges for the product. So commodity prices are reset every 2 months or a month or 3 months basis, and we therefore do not take the risk of commodity prices. So if the commodity prices go up, the margins optically look low as in a percentage terms, and vice versa when they happened other way. Like in a sense, then when the commodity prices go down, we see our margins optically looking better in percentage terms.
But that resets in a quarter's time when the prices are reset again and margins come back to kind of a steady state level. Is that right?
Yeah. I mean, see, it's a kind of moving thing. Every quarter we see some. I mean, and there are different kind of contracts. Some clients actually have a contracts for the full season. Some clients have a contract for 2 months price revision or 3 month price revision. So based on that, the overall pricing actually gets set. And we also, according to the contracts that we have, try to hedge our commodity risk. Correct.
Okay, sir. Thank you for the clarification, and best of luck for the time coming ahead.
Thank you. Thank you.
Thank you. The next question is from the line of Mithili Balakrishnan from Alchemy Capital Management Private Limited. Please go ahead.
Thank you for the opportunity. Congratulations on the great set of numbers. I just had a question on the AC. You mentioned that the growth in the AC segment was 212%, right?
Right. Yes, right.
This is in terms of revenues which you're talking about.
Yes. For the quarter.
So volumes would have been even higher because ASP you mentioned has come down.
Yes, volumes were even higher than that.
This is like significantly higher than what the industry has been doing. So just wanted to get a sense from you as, how are we gaining share? Are we gaining share from other players? Are we gaining share from their insourcing? What exactly are the drivers for this kind of a significantly ahead of industry growth?
So, I mean, this 212% is obviously an aberration, especially because, see, this quarter, the last year base was extremely low. As I clarified in the subsequent question that, the better way is to probably look at first half or on a trailing 12-month basis. But nonetheless, the growth there also has been pretty high. In the first half, our growth is probably close to 143% in the AC business. And we have been obviously gaining a little bit of market share from some of the companies, existing clients. Also, we have seen our share of business increase, and we have been able to add a lot of new clients in the last 1.5, 2 years, which have ramped up well with us. So all those things have actually helped us to gain market share and show this kind of volume growth in the AC business.
Got it. And when you look into the next year, in terms of the visibility that you're seeing, obviously it will depend a little bit on what happens in monsoon, etc. But is there a sense that some of the larger companies are looking to insource, because we hear at least the market leader has some, large factories which will come online, etc. So just wanted to get a sense on that.
We also keep on hearing what you are saying, but as of today, the outlook on the business remains extremely robust. In fact, we are seeing, to put things in perspective, we have increased the capacity even this year by almost 50% on a base of last year. And we think in the season, given the kind of order book that we have, we will be probably out of capacity, even on the increased capacity this year.
Got it. And any plans for looking at export, or is that not exactly on our agenda right now?
No, it is very much on the agenda. We have started planning for that. So we have a separate team of both sales, marketing, as well as the product development and R&D, which we have set up in the company. And in next 1-2 year, export is something which we will be looking at. So we have started developing products for the Middle East and African market on the AC side, and we are working towards it. So we hope that in next 1-2 year, we should see some start or some beginning in the export side as well.
Got it. That's all from my side. Thanks a lot for this.
Thank you.
Thank you. Ladies and gentlemen, we take that as the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you, all of you, for participating in the conference and taking your time out. I again want to reiterate, we remain very bullish on the product business at our end. We have shown a very strong first half, and even in the second half, we see significant growth opportunities. Thank you, everyone.
Thank you, everyone.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.